Were you aware that a major investing firm has declared that Tesla stock is a good buy at this time? After a difficult year for the industry leader in electric vehicles, many people lost faith in Tesla. However, some people think that this is an excellent time to purchase Tesla stock. You wouldn't want to overlook this information. Following Tesla's turbulent 2022 stock market plunge that saw shares drop by about 70%, many analysts revised their ratings and price predictions to reflect the global economic downturn and raise concerns about Elon Musk, the company's CEO, purchasing Twitter. Even though Tesla's shares fell dramatically over the course of the previous year, some Wall Street analysts are taking advantage of the cheap share prices. One company has revised its assessment of Tesla's prospects after a difficult year for the company's shares, pointing out that the buy-in price at this time may be quite low. The Tesla stock was added to the firm's focus list, and the analyst Edward Jones raised the stock from hold to buy. Edward D. Jones Co. LP, or Edward Jones, is a financial services company with its headquarters located in St. Louis, Missouri, in the United States. This information was stated in a message sent to clients a few days ago. Edward Jones has 18,000 financial advisors available to meet client needs, and it offers a personalized approach to investing. Earlier this month, CNBC reported that Edward Jones analyst Jeff Window lifted Tesla from a hold to a buy recommendation. The announcement coincides with a sharp decline in Tesla's stock price in recent months, which has won over previously dubious experts like Window to the company's share price. The analyst made the following observation: Elon Musk's time spent running Twitter and worries about slowing economic growth have contributed to a significant decline in the price of Tesla stock over the past year. Although a deceleration in economic development may put short-term pressure on auto sales, we think worldwide rules will drive the market's continued expansion for electric vehicles. Global emissions and mileage rules are fueling the EV industry's expansion. As rivalry among manufacturers intensifies, we anticipate Tesla to maintain a sizable market share in international markets, corrects the experts regarding Musk. Although Tesla's management team is capable of carrying out the company's present operational plans, many feel that Tesla would gain from Musk's departure from Twitter. They contend that new innovations in technology and products should also increase profitability. For Tesla, software-based or subscription-based programs like fully autonomous driving are particularly crucial since they are anticipated to yield higher profits. Tesla is also aiming to lower expenses and increase manufacturing efficiency. The analyst went on to say that continued advancements in battery design should lower prices and increase profitability. Window expressed their conviction that Tesla will be able to capitalize on this growing market with the introduction of additional products. We believe that Tesla's long-term growth prospects are not reflected in the share price. In a note to clients, Window said that Tesla's stock looked affordable given the company's potential for long-term growth. Tesla has above-average price movement both up and down relative to the market, due in part to shifts in investor views about the future of the company, which depends on growth in the EV market, Tesla maintaining significant market share EVs, and the success of new business ventures. Window wrote, alongside the automaker's EV batteries, he also predicted that Tesla's full self-driving FSD beta will keep getting better. Furthermore, Window mentioned that Tesla intends to introduce new goods this year, such as the Cybertruck, and that a revised Model 3 design may be released later in the year. Notably, the Model 3 project, codenamed Highland, and the Cybertruck, which is coming many years later, both point to possible gains in Tesla's market position this year as more competitors enter the EV space. With over 1.5 million registered pre-orders, the Cybertruck is arguably one of the most anticipated cars in history, even if Tesla won't be the first firm to release an electric truck on the market. According to Window, the stock movement this year has been striking. However, investor sentiment ultimately determines whether Tesla maintains a sizable market share in EVs and whether additional commercial initiatives are successful. Tesla's price fluctuation, both up and down, is above average compared to the market due to notable changes in investor sentiment. Unquestionably, 2022 has been a difficult year for Tesla, with the company's stock dropping by 65%. This decline has been aggravated by increased interest rates, Elon Musk's share sales, and worries about declining demand. In spite of this, it is anticipated that the EV market will continue to expand over the next years, and Tesla is well positioned to face new competition from other automakers. Musk has also declared that he will hold off on selling any additional Tesla stock for the next 18 to 24 months. It is important to remember, meanwhile, that stock values declined last year for more companies than only Tesla. In 2022, the stock market saw a general fall, and the stock values of all automakers experienced a decline. Startups like Lucid and Rivian plunged more than 80%, while major heavyweights like Ford and General Motors fell over 40%. The same challenges facing the entire economy, inflation and growing borrowing rates, affected automakers as well. Additionally, they had unusually empty dealer lots in the beginning of 2022 due to part shortages, and by the end of the year, their vehicle prices had skyrocketed, possibly deterring potential consumers. In general, Cox Automotive projections indicate that U.S. auto sales fell in 2022 to decade lows. Nevertheless, the company's flagship SUV, the Tesla Model Y, edged over the Honda CR-V to make it into the top 10 best-selling vehicles in the United States last year. The category, which encompasses both gas and electric vehicles, marks a critical turning point in the company's growing popularity. Additionally, the carmaker opened 2 plants in Grünheide, Germany and Austin, Texas last year. It is anticipated that the plants would persist in increasing their output of Model Y, having accomplished milestones of producing 3,000 units per week in the last few months. Having said that, a lot of people are wondering if this is the ideal moment to invest in Tesla stock. Tesla stock has never been this cheap, but there are a few solid explanations for why it is currently trading at $123. Tesla stock saw a difficult start to the 2023 trading year, plunging 12.2% at one point in the afternoon. Shares had dropped as high as 15%. Tesla's dismal Q4 2022 delivery figures, which were disclosed on January 2 while markets were closed, played a major role in the sell-off. With 405,278 vehicles delivered in Q4 alone, Tesla set a record with 1.314 million vehicle deliveries in 2022. However, a number of experts, including Dan Ives of Wedbush Securities, had predicted a Q4 delivery tally between 415 and 420,000. Tesla manufactured 8.5% more cars than it delivered during the quarter, but it's unclear if this discrepancy in output and delivery was brought on by a decline in demand or problems with logistics. In any case, the lower than expected delivery figures give a stock that has dropped 59% over the last 3 months even more reason to be concerned. An analyst claims that over the last 3 years, investors have placed a high value on Tesla because of their high expectations. However, the 65%. The decline in the firm's stock price in 2022 is an enticing opportunity for investors to participate in the market leader for those who think the EV sector and the company will continue to expand. It's important for investors and Tesla fans to understand that Tesla is in an industry that is still developing and can short-term disappoint investors. A prime example is the recently released fourth quarter car delivery data, which showed a shortage in deliveries due to factors including growing competition, slowing global economies, and the COVID-19 pandemic's consequences in China. Nevertheless, the business is still growing quickly. Although deliveries climbed by just 40% in 2022 compared to 2021, Tesla's production increased by 47% in 2022, which gave investors reason to believe that the company may not achieve its earlier estimates of average growth of 50% over the ensuing years. Having said that, it looks like an excellent opportunity to start expanding or purchasing your stake. Based on expectations for 2023, Tesla was recently valued at a price-earnings to growth ratio of less than 1.0, even if its earnings growth is limited to just 30%. For long-term investors, buying more shares today makes sense, but there might be greater deals to be had later. Although it's possible that Tesla stock will reach new all-time highs in the future, the issue with stock prices rising so quickly is that the firm needs to achieve ambitious targets in order for the value to make sense. Even though Tesla's growth has been astounding, the company's ambitious aims are becoming less likely due to a combination of external and internal issues. Another set of problems for Tesla is the potential for a recession combined with missing delivery targets. Nevertheless, like with any stock, it is impossible to predict with any degree of confidence what will happen to Tesla's stock in the upcoming months and years. But the bearish turned bullish outlook of Edward Jones analyst Jeff Window tempers Tesla's long-term prospects with its current stock problems, leading to a cheap buy-in price that might represent a significant opportunity for investors. Invest in Tesla stock immediately.